How's it going, everyone? Welcome back to the Faulty Time Frame Forecast. We're going to be going over Matic or Polygon. And for this particular analysis video, we're going to be starting off with where we had left off previously and just kind of reassessing what we had said before. So if you don't remember, we like to start on the higher time frames, the highest time frame possible with the most amount of historical data and structure available. In this instance, we went to the monthly time frame and the weekly, we went to the line chart, identified critical areas of structure, 38, 61 fib relative to the weekly structure zones. And then we went a little bit more granular and we went to the 78, 88, and 50 fib structures on the daily levels. So what I do want to actually do is continue with this weekly structural time frame and use the same approach going forward because I think it'd be beneficial for us to kind of reassess based on what's happened over the last couple of months. And we can see here that we do have an area of structure that ended up being resistance several times, turn, support, and right now we have a makeshift head and shoulders kind of forming right here with the third right shoulder forming at the moment. Now, the negative downside about head and shoulders is like this is that it's indicative of a downward momentum, downward pressure. It's a reversal pattern, so it could be problematic for those of us who are believing in this going up a little bit higher, or hoping or needing it to go a little bit higher. So at the moment, currently, I personally would like to wait to see how price responds to this area of structure right here. And real quick, we can use Fibonacci extension tools to kind of identify if that area of structure has any significance. And we see that this was the 138, the 136. So let's do that. This was the 361. Fibonacci is on the weekly, actually. So that's an extension tool. And what's cool about that is, that gives us additional confluence with our structure. Now, what we can do as well is do the swing high, swing low, and we're actually a little bit too high. For a 38% retracement, the last thing we can see is a swing low, swing high, and you can see that we're touching the 68 on the weekly as well. So this is about three pieces of confluence on why this area of structure would be significant. So that means what we're really needing to do is monitor this area right here on the lower time frame, so the daily and the 4 hour, to kind of observe and see what price is going to do in the near future. So if we go down to the daily time frame, let's see what's going on here, if we can identify anything worth observing. So real quick, we do see a downward trend. Oops, that's the only thing I hate about that tool. We do see a slight downward trend, and we're respecting that. We touched it with the wick, touched it with the body. Third time would be confirmation. Once again, I'm not seeing anything too crazy here. If anything, we would say we did have a small pattern that was formed and closed. And you can see with these ones, once again, just to show you from an educational perspective, that with these harmonics, we usually make it to the neckline. So all you really have to matter or care about these identifying is just W's or M's, and then alternatively it'd be the M. But we usually make it to the neckline of these patterns, and that's what happened here. So cool little tip for you. But at the moment, we're not seeing anything, and just going based off of that structure right there, we do have a wedge that was occurring as well. So we see that, and all this basically means is somewhat of an indecisive pattern. Now we're going to break either above or below, and what's going to happen is it's actually going to be indicative of the continuation of the direction. Now, if we do break up, I would like to say that we would come up to this $4.76 mark, and that would be testing our TP1. However, if we do fall, I think we would come back down to the 78 structural level on the weekly time frame, and then come and test this zone right here once more, completing that head and shoulders pattern that I was talking about. But at least from there, that would give us a good level of stability so that we can test to see if that's going to be treated as support and bounce up from there on the next bull cycle or run up, or we're going to continue to see some negative downward pressure as we start dipping into a bearish market for crypto and possibly all instruments as a whole. So anyways, quick update on Polymatic. It's been a couple of months. I'm a positional swing trader, so I really don't execute trades on a weekly or daily basis anyways. That being said, I think this is a great opportunity considering where Matic is at in respect to NFTs and dApps in general. I think it's gaining a lot of momentum from the non-coiner community and people who aren't necessarily experienced with cryptos. So from a purely uh, personal perspective, I think that it could be with a lot of strength in the near future. So that being said, this is Polymatic. See you guys in the next video. Leave comments down below on peers you want me to cover next, and I'll see you guys in the next one.